Ladies and gentlemen, good day and welcome to the Hindustan Petroleum Corporation Limited Q2 FY26 earnings conference call hosted by Antique Stock Broking Limited. As a reminder, all the participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then zero on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Varatharajan sir from Antique Stock Broking. Thank you, and over to you, sir.
Thank you, Sarthak. A very good morning, everyone. It's my absolute pleasure to welcome all the participants and the top management of HPCL to this results call. We have with us the senior management team of HPCL, represented by Mr. Vikas Kaushal, Chairman and Managing Director, Mr. Rajneesh Naran, Director Finance, Mr. S. Bharadun, Director Refineries, Mr. K. Vinod, Executive Director, Corporate Finance. Without much ado, I would like to hand over the floor to Mr. Vikas Kaushal for the initial remarks. The floor is yours, sir.
Thank you, Varatharajan. Good morning, everyone. A very warm welcome to the call from on behalf of my colleagues. Varatharajan has already introduced all of us on the call. At the outset, I wanted to welcome you all to the Q2 analyst call of a trillion rupee market cap company. On 28th of October, our share touched 478 briefly, and it crossed a market cap crossed 1 lakh crores, trillion rupees. And fleet, I think we have broken into the top 100 of market cap, which I believe is not the rightful place. It should be much higher, but nevertheless, we'll take it in the stride. I wanted to begin by thanking you all for your support and passion for HPCL. Since our results broke out 2 days ago, many of you have written about it. Of course, many of you are invested in HPCL, while many others advise investors. There are a lot of positive opinions about the results. We've read through many of those. There are some who have not been impressed. Believe me, I've read through those most carefully, as these highlight some diverse expectations, which gives us reason or food for thought for what else could be done. All these are good inputs for the management team, and I like to thank everybody who's opined on the result. In context of the call, we will stick to the pattern of what we have been following in the last 2 calls that I've had the privilege of doing with my colleagues. We'll talk the management view on the current performance, and second, what are we doing to shape the future of the organization. I'll just cover a few data points because the detailed results have been all given out in all the stock exchanges and everything. Presentations have been given, so I'm sure you're pored over those. But I'll just give you our views on how we look at it. Talking of the current performance, obviously we gave a very solid performance. Our H1 profit at 8201 crores is 731% up from last year. Again, I'm not gloating on just how much percentage is up, because we know the first 2 quarters of last year were a very depressed base. But nevertheless, in the first 2 quarters of this year, we have earned more PAT than we earned in whole of last year. But what I wanted to highlight was something different. It is the consistency of the performance. Those of you who have been tracking the stock for a period of time would recall that in all of last 4 quarters, HPCL has consistently given quarterly profits above 3,000 crores. Q3 last year was 3023, Q4 was 3355, Q1 of this year was 4300, Q2 was 3820. On a run rate basis, not on a financial year basis, HPCL delivered a PAT of 14,579. If you put last 2 quarters of last financial year and this first 2 quarters of this, which is 1,215 crores per month, and you can do 40 crores per day kind of numbers or whatever the math points out. During this period, EBITDA of HPCL was 28,606 crores, and I've not done the exact cash generation, but I estimate that the business spun out cash of around 20,000 crores. Again, I don't track all the stocks as closely as many of you do, but I can't think of too many businesses in India who are generating that kind of a cash in a 12-month period. In one of the earlier analyst calls, maybe 12 or 15 months ago, I wasn't part of HPCL at that time. Director Finance had laid out a pathway for a 40,000 crore EBITDA. We are on track of that. The 12 months running is 28,602, and as you'll see later on, there are positives which we anticipate in the coming quarters, which will take it up higher. This is not the end point. We will aspire to take it to 50 and even beyond that. Just to remind that HPCL has consistently given high returns to the shareholders. Now, I know each shareholder has their own different expectation, but I just looked at the last 10 years data, which has again been posted on the stock exchange disclosure areas. We gave a 19% annualized return over a 10-year period to our shareholders, September 30th, 2015 to September 25 there. And if you look at the stock surge in October, this 2019 might be touching 20% itself. The market cap during that period increased from 26,230 crores to 94,263 crores on September 30th, 2025, which obviously has gone beyond 1 lakh crores right now. And again, I think HPCL is one of the few companies who have consistently over a period of time rewarded the shareholders, whether it is in form of a 13% annualized increase in market cap and the dividends which it continuously pays. Our strong performance in the years is backed by a lot of good physical performance. Quarter 2 GRM was $8.8 per barrel. Even if I knock off inventory losses, which many analysts are very curious about, it was $8 per barrel was what refineries generated. The refinery throughput has also increased. If I just look at the throughput in quarter 1 of last year, it was 5.76. In quarter 2 of this year, it is 6.57. Same 3 digits, except probably going in a different order. It's a 14% increase in refinery throughput in the last 5 quarters. The distillate yield, which is often a mark for profitability of refineries, we were able to increase the distillate yield from 72.7% in quarter 1 25 to 77.7% in quarter 2 26. And with completion of some of our upcoming projects, we expect it to take it further. We've also consistently grown the market side, 3.5% increase in market or total sales in H1 of this year as compared to H1 of last year. With this strong results, we have worked to reduce our debt. As on March 31st, 25, we had 63,323 crores of debt at a debt equity ratio of 1.38. On September 30th, 25, the total debt has reduced to 55,808 with a debt equity of 1.07. As we have been talking in the earlier analyst calls, debt reduction has been a focus for the management team, and we wanted to deleverage the company and get it into lower debt equity levels. At the first analyst call, in May at the end of annual results, we had given guidance for 1.1 for FY26 end. We are confident that we are going to achieve this, and in fact, as a management team, we are revising our target to a sub 1 now in terms of debt equity ratio by end of this year. As many of you would have known, or probably everybody knows by now, the LPG under recovery for the previous period has been announced. HPCL is going to get 7,920 crores rupees over the next 12-month period. It is 660 crores every month starting from November, which would mean 3,300 crores of additional numbers for us in FY2026. Some of it, as you can imagine, would go towards reducing the debt further. We, as a management team, are very confident of the trajectory, and this is reflected in the decision of the Board of Directors to announce 50% interim dividend for our shareholders. With a quick overview on the financial, and I'm sure you have questions, we can take them later. Let me come to the status on the projects, which I'm sure you want to hear from the management team. Since we last spoke, we have completed a couple of significant projects. Our underground LPG storage cavern, which is a fantastic engineering marvel, is complete now. The gas has been charged and it is back into full operations. About 3 or 4 weeks ago, we completed a much delayed project on Sangrur-Bhatinda pipeline. The pipeline is fully laid, it is charged up, and products moving through that. But coming to the big ones, Vizag, I'm very excited to announce that yesterday we completed the pre-commissioning test of the refinery, and now we are starting from today. We are starting the what we call as startup activities there. This is typically a 3-4 week cycle. My team's promised me a commissioning date of, or a feed-in date as we call it, of 24th November, but I'll give them a few days of here and there because these are complex hydrocarbon projects. But in a nutshell, RUF is expected to go on stream in the next 3 or 4 weeks. It will take a few weeks maybe to stabilize, but as we had announced in the previous call, we would get full returns, or we'll get a full quarter of RUF performance. We would anticipate the GRMs to ramp up as we get used to the new complex project which is there. Barmer has also progressed well. When we declared the result on 29th, we had taken our board of directors to Barmer and we met there. The overall refinery is 89%. Overall project is 89% complete. Refinery is greater than 95% complete. We had given a guidance of crude in this year. We are holding on to that guidance, and in the next couple of months we will do the crude in. I'll again caution it could shift by a few weeks here and there because each testing throws up a surprise. While talking of the projects, let me also very quickly address the issue which might be on many of your minds, the one which we declared to the stock markets earlier on Monday. As we had, in spirit of complete transparency, proactively declared it with the stock markets, we did face an issue of chlorine contamination on one cargo which came into our refinery. Somehow it invaded into our asset and caused a bit of damage. A part of the refinery, not whole part of the refinery, was shut down, and the remaining part had to be run for lower throughput. Again, those of us who are engineers can understand this is a highly corrosive material we treated with. The good news is we are almost through with that, except for just dealing with some of the contaminated products. As of last night, the unit which was down has fully back, and now we are ramping up to full capacity. I'm sure you are curious to know about the impact of it. Well, we are working out the full impact, but whatever we know as of now, I can kind of share it with you. And later on, the good news is it's not as bad as we had anticipated when we gave out the stock market guidance. We were able to contain it much better with a lot of proactive efforts by our team. We have impact on 3 or 4 buckets. First, we have a bad product, essentially naphtha, about 100 TMT. We had no options but to export it at a discount, and that knocked us back by 150 odd crores. There are some postponement of revenues because one of the final finishing units was down, so we had to hold back intermediates, but that is only postponed. Our revenues will going to come later in the next month. We have some crude which is left over. We are trying to do the disposal on it. As and when it gets done, maybe it will have some more impact, but we don't anticipate it to be massive. The last impact is when the unit was out and extra movements we have to do, we think we'll be able to contain it within about 150 crores or thereabouts. So overall, because of a lot of proactiveness by our team, we were able to get it in a much more controllable zone. The unit is back up, and we took this opportunity to advance one of our shutdowns and do some of those activities. Overall, it's manageable, and as you have seen our savings which are coming from our cost program, this will be very well contained within it, and so as a management team we are comfortable at being able to mitigate the financial impact of it. So that was on the current performance. I'll quickly talk about shaping the future. As you know from the last call that we have been focused on 4 key planks, and I will stick to those 4 planks. Under these 4 planks, there are 14 initiatives which we are doing across the organization. But in the interest of time, I'll just call out the planks and then highlight a few of them. First is operational efficiencies. Second is future growth strategies. Third, working on our enablers. And fourth, communicating our performance and our message to the external stakeholders. Few key highlights. I'll not go into every individual area, but few key highlights. On the operational efficiency, we had announced two major programs, Samriddhi, which was a cost takeout program. We had given a guidance of 1,000 crore target as a cost takeout. At the H1 level, the accruals are 823 crores, which translates roughly about $0.5 per barrel. In one of our discussions with an analyst team, they asked us this question on what's recurring and what's one time of it. Well, 35% of this is recurring, and which is 301 crores, and 522 is one-time savings which we have been able to do. We are very confident we will exceed the initial target of 1,000 crores, and my head of corporate finance, K. Vinod, who heads this program, has promised me that he's going to try for 1,500, though we are not giving that as a guidance. But we are also going to do Samriddhi 2.0 from April 1 because we believe there is more efficiencies we can target. At the right time, we'll come back with a guidance on what's the next level we are looking at it. I think this has gone across our organization quite well, and those of you who are very deep into the numbers will look that our OPEX is lower. Part of that OPEX is lower because direct savings the Samriddhi program has achieved, and part of it is lower because everybody knows the cost is being washed there, so there is a prudence in spending. Second program we had talked about was increasing efficiency of our retail network. As we had told, it's been launched out at 4,700 outlets. It's given mixed results. We had hoped for more, but it's been a good learning process. Just in terms of quantification, we have about 3 to 4 KL per month as a throughput increase from these outlets, whereas the industry averages have been flat or minus. So these outlets have performed better than that, but they are lower than the target which we have and we had hoped for. Nevertheless, the teams are working on it, and we have also launched an initiative working with an external agency, one of the top management consultants, to work on future-ready retail organization. The third thing I wanted to talk about was on digital. While HPCL has done a lot of steps in the last 5-6 years on digital, we have now started a program with an reputed international consultant to prepare the next wave of digital roadmap. How do we capture some of the latest developments on digital into our day-to-day working? I will very briefly talk on some of the future initiatives we are doing. We are doing significant effort on non-fuel retail. We are trying to expand some of the activities and, in a way, leverage or make use of our retail footprint much better. On Petchem, we are in an advanced stages of readiness for our launch, which is anticipated middle of next year when Barmer Petchem stream goes online. And a lot of R&D effort is going into creating niche grades. We've also worked on expanding our gas portfolios. We had announced 2 gas deals already, and in between we have worked on picking up spot or term cargoes, doing some selling of gas short-term and medium-term, and working towards increasing utilization of Chara. There are many other initiatives which are getting us ready for the future. I will not take a lot more time because I want to leave the time open for questions and a dialogue. I'll summarize. HPCL is on a great and solid trajectory. As I just said earlier, generated 28K of EBITDA in the last 4 quarters on a running basis, and plus 20K plus of cash, give or take. That's an approximate number, but roughly 20,000 crores of cash. We have a very energized team which is excited about creating greater glory for HPCL and greater value for its shareholder. Once again, I'd like to thank you all for your interest in HPCL. Thank you for joining the call, and the management team here with me is happy to take each and every question you might have. Thank you. Vadrajan, back to you.
Thank you very much, sir. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Our first question comes from the line of Probal Sen from ICICI Securities. Please go ahead.
Yeah, good morning, sir. Thank you for the opportunity. If I may take a moment to say this was an extremely useful and focused briefing that was given at the start of the call. Covers a lot of the areas that we anyways tend to focus on. So thank you for that. Having said that, just a couple of follow-up questions, specifically on the petrochemical part of the Rajasthan refinery. I think in the initial plans it was shared that about 27 or 28% of the product yield would be essentially petrochemical projects. So till that time, actually, the petchem throughput comes out. In the first half, let's say, after the commissioning of the refinery part, what sort of throughput can we actually expect from Rajasthan refinery? Is there any sort of guidance that can be shared?
So I think it will, Robert, thank you both for your comments, and you always win the early bird prize on the call, so I send you a nice gift hamper for that. But jokes apart, there will be a ramp up of the crude as we assemble all the units in the refinery, ramp up of the refinery utilization after the crude in. Within a 3-month period, we expect the refinery section of that to be able to be fully geared up for 100% run. Without the petchem being in place, we should be able to run it at around 8 MTP or thereabouts. Now, this is just, I would say, our broad plan as of now. See, these are assets which are highly complicated and they have a life of their own. So that's our expectation, that till the time petchem comes on stream, once all the units are up and kicking, which will be roughly a 3-month ramp up, we would be able to get from a 60%, 50-60% utilization to a 85-90% utilization on the CDU.
Got it, sir. And the second question with respect to the Vizag, the CDU mentioned that the commissioning feed will happen at November end. And I think you did mention about the full quarter of performance coming through. So is it safe to assume that even building in a couple of months, FY27 Q1, we should have mostly the full commissioning and Vizag along with secondary processing running at full tilt, starting of FY27?
Yes, I think it would be sooner than that, Rahul, because we have taken a lot of time to ramp up the unit and do all the checks and all those things are required. When I said that it will take some time to stabilize, is when, we synchronize all our crude purchases and we synchronize all our downstream activities to it. But we would anticipate, given the effort which has already gone in, that the fourth quarter of this year, we should be able to run close to where we would want to look at it. And as goes with any such asset, further optimization keeps on happening. But your presumption that full benefit for next full year should come is a very safe one, albeit a bit conservative.
Understood. And one last question, if I may, housekeeping one. If I can get a capex guidance broken up into segments for FY27 and 28, if it is available.
For the future capex?
Yes, for FY27 and 28.
Have we done that? You want to?
See, on an average, we'll be doing around 30% on the refinery front.
Okay.
Then around 60% would be on the marketing, and the rest all would be the new business lines which will be.
Is there any amount you can share in terms of range of the number?
We haven't done our capex planning. This year, as we had said in our earlier analyst calls, we had gone conservative on capex because we wanted to get the debt equity under control. Looking at our debt equity right now, we will come out with this thing. So on an average, we have been spending 12 to 14,000 crores. We expect to spend in that range. If it is more than that, then we will come back in the subsequent analyst calls.
Perfect, sir. That's very useful. Thank you so much. I'll come back.
Thank you, Prabhat.
Thank you. Our next question comes from the line of Vivekanand from Ambit Capital. Please go ahead.
Yeah, hello. Thank you so much for the opportunity. Extending the question on debt, would you also have any color at this stage on the debt level of HMEL and HRRL? And a related point on that front is you had outlined value unlocking as a agenda and announced that the lubes business will be demerged and you would seek the best value for that. So just wanted to understand when, or also pass on this feedback that when investors look at HPCL, typically we look at standalone debt, but we also understand that there is a large amount of debt at HMEL and now HRRL. And now because those two refineries are going through their own issues, for example, HMEL through a major cyclical downturn in petrochemical and deleveraging being hard there, and in HMEL and HRRL, of course, is a new refinery, so there will be accumulated losses that you will have to absorb. So, because I want your thoughts on at an overall portfolio level, how should one think about HPCL from a deleveraging / value unlocking perspective or capital recycling perspective, however you may have thought about it. Thank you so much.
Yeah, I'll request Director of Finance to just first share the numbers and then I'll opine on it.
Yeah, coming to the debt of the group companies and primarily HRRL and HMEL. As on date, in HRRL, that is the Paradise refinery, the debt level is around 40,000 crore. And as regards the debt in HMEL is concerned, it is around 36,000 crore. And looking at the group level for the entire HPCL and the group of companies and the proportionate share in the individual companies, the debt equity would be around 1.8. So this is when the HRL is not performing. There is no EBITDA contribution from them yet. So as and when these companies start operating, even the others where, like in case of HPLNG and all, where we are gradually ramping up the facilities, the EBITDAs will also improve. So that would also enable us to contain the debt equity levels, and in the near future you will see that progress and change in this direction.
Sure. No, thank you. I think Director of Finance has already covered the overall debt equity. We are looking at that, and that also should come down in terms of deleveraging on the aggregate front. HRRL will give a boost, and again there is enough public announcements right now on Andhra Pradesh refinery, which BPCL is doing. Some of you can benchmark the numbers and then see if that refinery is viable. HRRL is also going to be generating a lot of good revenues there. On your other questions on unlocking, I think my stand on that is very consistent with what I've taken in the last two analyst call. Yes, the HPCL board had taken a decision at one point of time to unlock the lubes business. We had moved an approval note to the government because we need to have a DPEM approval on that. Having said that, in the last 6 months, especially when I came in, we had discussed there. We figured out that the better value for HPCL and its stakeholder is not to immediately deleverage, not to immediately unlock that business, but build the consumer-facing part of that business bigger and stronger so that it gets the right return around it. See, for any management team, doing an unlocking by a financial restructuring is a lucrative option which is available at any point of time. But I personally believe that alone does not give long-term value creation for the shareholders. Long-term value gets created when you fundamentally build the businesses. So on the lubes business, our focus is very clearly building our consumer side of the business much more rapidly. See, there are two sides of the business. There is a consumer and there is a bulk supply side. We are very focused on building the consumer side. There are a lot of moves and tactical things which need to be done there, and I'm very happy to share that business is growing very high teens for us in terms of growth things. So in some ways we are postponing any potential decision of unlocking lubes at this point of time for the quest of creating a higher shareholder value there. The unlocking can happen at any time, but for the moment we want to build that business further. That's a consistent stand we have had in the last 3 calls that I have done, and it is our stand as a management team. So we are very transparent on it.
Because this is very helpful and thanks for sharing that. Just one follow-up. Now I understand lubes has a very big consumer side to it, but the utility assets that you may have, is there scope for you to perhaps unlock value through alternative structures like InvITs or perhaps getting focused investors who are looking for fixed returns on those assets? I'm just asking in the context that HMEL itself, the debt level in the last 2 years has broadly remained the same or marginally gone up. So the context is more broader in terms of at an overall portfolio level rather than just looking at loops in specific. Thank you.
Sure. I think that's a very fair push on that. See, HMEL, I won't want to opine alone on this because we are an equal partner to an international group, and it's a joint decision which people have to take on that. So, that runs at an arm's length relationship given the nature of the relationship, and we have a very strong relationship with a joint venture partner, but both of us are very respectful that there is a management team which runs it and we provide arm's length guidance on it. So without discussing with the partners, I'll not comment on HMEL option on it. On HPCL side, I think that's a fair thing. To be very honest and transparent, in the last 7 months that I've been here, our focus has been on a lot of here and now issues. We had a lot of capex which was delayed. A lot of you were asking us tough questions on the capex, etc. Now at least I can see you're asking us future kind of questions, which is, I think, a good sign that you're satisfied that at least we are getting the capex right. All these, I would say, would be topics as a management team we would be taking on board maybe in the first quarter of next year. See, it's taken us a lot of time to get these assets really at a stage where we can start returning on the capital which has been deployed. And believe me, running any hydrocarbon asset is not an easy thing there. So very valid suggestions. We will make a note of it, and in some of the future calls we'll discuss our viewpoints on it. As of now, there are no immediate options on say we are going to do an InvIT here or not. Possibly we could do it in future. Yeah, we could explore that possibilities in future. There are a lot of other things we could do in terms of increasing value, but the fundamental principle I get driven by is making sure that the intrinsic value of the asset is not lost. So, we have a LNG terminal, we could monetize it, but we are also clear that there is a potential to create one of the best LNG assets there. So our focus on that right now is to make sure we are getting it into a cash break even immediately. After that, it gives me a flexibility of creating a bigger asset there. It's 5 MTPA, we could easily scale it up to 10. It has potential to even a much, much bigger terminal as LNG grows. So we are keeping our options very, very open at this point of time without going down onto one specific path, because we believe the basic infrastructure, the basic asset base HPCL has is already generating good cash out. We will be able to deleverage it. We'll be able to absorb the consolidated, you said, accumulated losses, HRRL. Yes, every hydrocarbon asset greenfield has accumulated losses in the first few quarters, etc. We are very confident we'll be able to absorb it. That's why I started off by giving you the cash the system is generating right now.
Great, Vikas and team. Thank you so much for your detailed answers and all the very best.
Thank you. Our next question comes from the line of Sumit Rohra from Smartsun Capital. Please go ahead.
Yeah. Hi, sir. Good morning. Firstly, congratulations to the management team and chairman, sir, for a fantastic performance of 8,200 crores, sir, in the first half. Sir, I will take just few minutes because, you guys have, the entire management team has done such a wonderful role, because I remember I've been with this company now over a last decade. And, there were years when a company would make about 1,200 crores in a year. And today you all are, working so well that we are making 1,200 crores a month. So I have to say that, this management team is one of the best management teams I have ever seen. You guys are doing a fantastic job, sir. Great show. Good luck. God bless you all. So now coming to the fact that, that you guys are, generating 20,000 crores of cash. I mean, that is a huge number, right? And, the matter of fact is that, 2 crore Indians use fuel pumps on a daily basis. In fact, it is on your pure power as well. I mean, if this is not a consumer stock, then what is, but we still get value at, 0.2 times, 0.3 times sales. So, sir, definitely the markets are, not re-rating us in terms of, the actual performance of what we deserve. Because I really appreciate the fact that, we are a 1 lakh crore market cap today. So many congratulations on that. But our journey is long, right? Because today BPCL is, talking about a $11 billion refinery for 9 million. But your entire 45 million ton plus retail outlet plus is available at 1 lakh. So, there's something, which the market really needs to get more confidence on earnings. So, sir, I would, request, if you can just spend a little bit time of, talking about our $5 billion EBITDA, because of the fact that, today we are nearly 28-30,000 crore, and now with the Vizag residue upgradation project, which you've highlighted in detail, plus, the Barmer starting to, kick in the next few quarters, if you can just throw a bit of light on the 5 billion EBITDA, it will kind of, reassure, the investor psychology that, where is something headed over the next couple of years. Thank you so much, sir, and wish you all the best to you and the management team.
Thank you, Sumit. I think appreciate your question. You are the one who's been pushing things hard on all those calls. I would answer this in two parts, and I'll request my colleagues also to chime in on this. First, I think as much as your frustration on the valuations, we also get sometimes frustrated on that entire thing. I said in the opening remarks that each one of us can think how many businesses in India generate 20,000 crores of cash in a year. I can't think of too many. But anyway, we leave that valuation part in the safe hands of the analysts, to each to their own ways of looking at things. The way we look at the business is 2-3 aspects. One, we have a very solid business, has great predictability of consistent performance in some ways. And we shouldn't forget that we are a diversified company. We are strong on refining, and with upcoming Barmer, the rough other projects which in the future will announce some debottlenecking, etc. In next couple of quarters we'll announce some of those. We are increasing our refining capacity and coming closer to matching refining versus selling. That gives us a great comfort, and I know many analysts focus on GRM. I personally do not worry too much about GRMs, because for me the GRM is in my refinery divisions to one-upmanship on the same internally. For me, what really matters is the crude price and what I'm selling the product at. Crude, as we all know, has been reasonably range-bound, and from a year ago, 6 months ago, it has come down. Each one of us can have our own views on crude, but we think it will be range-bound in mid-60s around that time. There will be spikes, but by and large, even a few weeks ago, it went to 70 and then very quickly corrected. Then it went down to 64. It's today 64. That's a benign kind of a movement. It is not the 100 kind of a movement. That's point number one. The second point is our selling price has been by and large steady. I know many analysts have this, so this election the price will go down, that election price will go down, etc. I think for those of you who were present at the analyst meet or the discussion with analysts with the Honorable Minister and Secretary he had done, they gave the government's view on that entire thing, that they expect the companies to be earning reasonable profits because they have been in weather of capital investment and creating a lot of value. So we forecast reasonably steady fuel prices, and I would say even if there is a minor 1 or 2 rupees here and there, we are strong enough to absorb those things. We gave transparently the loss we would have in the recent MR incident, because as a management team we are confident that we can take it in a stride and move forward. Those things keep happening in the business. So we have a steady business on the fuel, the whole refining and fuel side. The second part is we also have a very solid LPG business, which interestingly now we have 9.7 consumers, where 9.7 crore consumers, almost touching 10 now, where we get into the phase every year. Every month or 2 months, we send a delivery boy to their homes. That business also has improved a lot, and if you look at even prices, the under recoveries on that has narrowed very, very significantly with the lowering of Saudi CP prices. And if you've been very closely following the move, some of it has come in press. HPCL and I would say some of the peer companies have either individually or collectively done initiatives to even get that business under control. Besides that, we have other businesses which on their own are reasonably big businesses. I talked about the lubes in a different context. That itself is a few thousand crore of business for us, completely, I would say partially consumer facing because there is a bulk business in that, but increasingly growing on the consumer facing side. So we see the business as a very solid one. The supply chain modes we have, the assets we have are definitely there, good. What gives me even more confidence in giving out the projects which I've been giving out is the fact that we also believe there is a tremendous improvement potential we have in the business. We gave a guidance of 1,000 crores as a cost takeout at the beginning of the year. We are tracking to that guidance. Today we announced that we are going to do another wave of cost reduction next year. While we have not given a number, but we think there is an efficiency which is feasible there. The third instance I would want to say, our assets itself, we are improving the way we are running. We gave the numbers on distillate yield improvement. There are more such efforts which are going to come in the times to come that will increase our margins there. Last but not the least, I think Sumit, your pain on us not being viewed as consumer companies is in some ways valid. I hope more people view it that way. But one of the things we are also going to do is make sure that we are making or doing steps more as a consumer company. I talked about reimagining our retail of the future. How are we going to serve the retail customers? How are we going to own the customer? So there are initiatives which is there. Think of the unlock potential there. I talked about 9.7 crores customers where we get into the home every few weeks. I don't remember offhand, but my colleagues said how many petrol pump guys are here? 2 crores a day or some huge number which you have to count a number of zeros. 1.75 crore retail customers we there. As of now, we have not yet worked out cross synergies, cross leverages, etc. But those are aspects in our future plans. We would work on those, and that will make us even more stronger as consumer organization. So I'm quite hopeful. I look at it optimistically. While the rating or the valuations is an individual choice, people can decide. As a management team, we can only focus on the results we can give. We are very, very focused and very confident of the consistency of our results. And even if there are shocks in terms of prices going up and down at times, we are strong enough to absorb those. That's all I can say on this, Sumit. And each one of us would have our own judgment on this.
Thank you, sir. Thank you so much, and wish you all the best, sir.
Thank you.
Thank
Just
you.
one thing, Sumit, we can give you also the breakup on, you had asked of $5 billion EBITDA, we can give you a breakup of that.
Yes, sir.
Yeah. Our chairman had already during his speech said that in the past 4 quarters, we have already touched 28,000 crore as regards EBITDA is concerned. Now, what is it is going to increase further now? The moment the rough unit is going to come, we are going to add around 2,500 to 3,000 crores at EBITDA level. Then if you come to HRL, at the EBITDA level, considering our share of 74%, around 5 to 5,500 at the EBITDA level. Then we have our new units at HPRG and the HP LNG and all, where we are taking baby steps, and in another year or so, maybe another 2 to 3 years, we will be getting around 1,000 crore of EBITDA contribution from them. And plus, there are so many other various new efficiency and profitability improvement initiatives and all which are being taken up. So this number of 40,000 crore is a number which we would definitely be achieving it. And our target is to go beyond it, but this is what 40,000 seems to be a number where we feel we are fairly confident of achieving.
Thank you so much, sir. Thank you for your detailed explanation. Thank you, sir.
Thank you. Ladies and gentlemen, in order to ensure that the management will be able to address questions from all the participants in the conference, kindly limit the questions to one per participant. Should you have follow-ups, please rejoin the queue. And another quick reminder to the participants to keep your lines on self-mute while the management is answering your questions to ensure there are no disturbances in the conference. Our next question comes from the line of Yogesh Patil from Dolat Capital. Please go ahead.
Thanks for taking my question, sir, and congratulations for the good set of numbers. First question related to any inventory gains during the quarter, and if you could share core GRM during the quarter. Sir, my second question is related to the Project Samriddhi. In the first half, we have saved approximately 823 crore and $0.52 per barrel kind of a saving at EBITDA level. How you have arrived this number of $0.5 per barrel? Because we are trying to back calculate it on the refining volume, the number is little bit coming slightly higher. If we add the marketing into the refining volume, then it is indicating a little bit lower compared to the $0.5 per barrel.
It is total considering at the sales volume level.
Oh.
This is represented basis the total sales of the corporation. And
okay. In inventory?
Yeah, inventory. Yeah. Inventory we had 8.8 was the reported margin, of which 338 crores, amounting to about 80 cents a barrel was the impact on account of inventory.
This is a crude inventory. This is a crude inventory. Okay.
Yeah. Marketing is 569 crores.
Okay. Sir, sorry, sir. Go ahead, please.
Yeah, go ahead. We are done. That's what.
Yeah. So last question related to the product slate. How much is the diesel, petrol, and the naphtha product slates at HPCL refinery level, excluding the Batinda, right now, if you could share?
We should have that number there, but maybe you have the.
Typically, we do diesel is about 50%. Yeah, MS will be about 20-25%. Balance all other bottoms, LPG, and specialties will be the balance.
Lastly, touching to the operating expenses per unit at a refining segment, and if you could also share on the marketing segment, can you give us any broader numbers? What are the operating expenses per unit on the refining side and the marketing side, if possible?
The refining is around $2.5 per barrel.
Thanks, sir. Thanks a lot, sir.
Thank you. Our next question comes from the line of Somaya V from Avendus Spark. Please go ahead.
Yeah, thanks for the opportunity, sir. So my first question is on the Russian crude sourcing. So if you could just help us with the last quarter, what is the mix of Russian crude sourcing? And in a situation that in case we need to kind of transition away, if you could just help us both qualitatively and if possible quantitatively, what would be the impact of crude sourcing cost?
Yeah, I'll be very honest, Russian crude does not keep me awake. I'll give you data, then you can understand why. See, I've been saying crude buying is a very economic decision based on prices and the quality of the crude and which refineries can take what crudes. In the second quarter, if I look at the total crude we bought, it was 6 million tons or thereabouts of total crude we had, of which 1.1 million, 6.1 was the total, 1.1 million was indigenous crude, 5 million was imported. My Russian crude in my overall basket was only 5% in the last quarter. For a very simple reason, whatever parcels we could look at it, they were not economical to run on our refinery. We would look at it. So we run a lot more on Middle East crude and increasingly on West African crude. And frankly, for 5% crude which on a run rate basis which are running on my refineries, I'm not losing my sleep. I can easily get them from other sources. So I don't worry about it as much as the press worries about it and everybody else, because we are very well structured there on our assets on other crudes, and even when rough comes in, the crude mix we have to look at it. We know which crudes we need to get the 2-3 margins, and they are not the Russian crudes. We could run Russian crudes there also, but we have alternatives with us. So I'm not worried about it at all.
Got it, sir. Thanks for this explanation. So second question is on the capex. So now that Barmer is coming to more like on the completion phase, how should we think about it generally? We will get into an investment mode once existing project gets completed, but here we also have a deleveraging plan. So is it okay to think that maybe next 12 months or 18 months until the balance sheet gets a bit more leaner, we will not take up major capex programs?
Yes, I think that's a fair thing to look at it. Having said that, you can understand in an asset as large as ours, getting to 5,000-10,000 crores network expansion, replacements, all those things are our routine capex would be in that region. But we are, as of now, there is no major big $5 billion, $10 billion capex program on horizon for us. There are projects. There are also debottlenecking projects which we are going to take up in the next couple of quarters, but they are in the smaller ranges which we are looking at.
Sure, sir. One bookkeeping question. HMEL, if you could give us the EBITDA number and PAT number for the quarter and also petchem contribution, that would be helpful. And I think earlier participant also was asking any inventory impact on the marketing side. If the data is available, if you could share, that should be helpful.
I think marketing data was shared earlier. You can repeat that. Maybe it got missed.
Yeah. The marketing inventory was 569 crores.
Sure.
No, you're talking for HPCL, aren't you?
Yeah, marketing.
Yeah, HPCL. Yeah, HPCL. Yeah.
Yes.
And the other question was on the HMEL EBITDA and PAT.
HMEL EBITDA was for Q2 was 1,400 odd crores.
So PAT and petchem contribution within this is possible, and the PAT number.
The PAT would be about 170 odd crores.
Sure.
Petchem contribution was around 35-40% of this.
35-40% of the EBITDA. Is that the right understanding?
Yeah. And quarter two actually has been good, better for them than quarter one, because refinery cracks, as you all know, have been historical highs right now, or very good numbers on refinery cracks. So they've done well on quarter two. They have improved on quarter two a lot.
Got it, sir. Thank you.
Thank you. Our next question comes from the line of Akash Mehta from Canara HSBC Life. Please go ahead.
Hi. So just one question. So in terms of the crude impact because of, the refined product impact because of high salt and chloride content in the oil that you have processed, you have mentioned the impact in terms of the naphtha output, and you all will still be selling oil which is already there. But in terms of resumption, in terms of normalized throughput, by when can we expect all the units running back on a normalized level? You could just highlight that and also progress on that.
So, as I said earlier in the call, as of yesterday evening, we started the last unit back after taking the shutdown. Each of these units have, you look at them for 24, 48 hours. So for all practical purposes, we're back on stream fully. It will take a few hours in terms of, we restarted it last night.
Sure. Okay, that helps. Yeah. Thanks a lot.
Thank you. Our next question comes from the line Vikas Jain from CLSA. Please go ahead.
Hi. Thanks for taking my question. I have a couple of them. Firstly, on the inventory numbers, the numbers that you mentioned were both gains, and this is for this quarter. Can you just remind us again on the 1Q numbers, because what I have is a round number. So 569 crore is the gain for 2Q in marketing. What is the loss number for 1Q?
650.
Okay. And similarly for refining, 338 crore is the gain for 2Q, right? And the loss for 1Q would be how much?
Around 1,500 crore.
Okay. Just one other thing, while the EBITDA growth potential that you highlighted by project was clearly very useful. Could you also give a sense of how capitalization picks up for each one of them? Like, for example, you said that the Barmer project, for your 74% share, you see the EBITDA, I think about 5,000 crores incremental coming in a couple of years of stabilization. So as compared to that, say, for example, depreciation and interest, how would those numbers look like when and then it is fully capitalized?
The depreciation normally nowadays the refinery is being depreciated over a period of 40 years. So if you take the 40 years and then you depreciate, it would be around 2,500 crore of actually 2,000 crore. Yeah, 2,000 crore of depreciation. And in terms of the interest cost, it depends upon the cost, the rate of interest. But even if I take the current ruling rate, definitely the moment this project is completed, the COD is achieved, there will be ample scope for us to do the refinancing also and bring down the cost. But even if at the current level, if I take, it would be around 4,000 crore of interest cost.
Interest. Okay, sure. And in about, say, by FY27, your capitalized interest for last year was standalone level was about 1,000 crores. How do you see that coming down, by FY27? I think there'll be very limited capitalization, right?
So next, by 27, everything will get capitalized. After that, everything will go in P&L only.
So basically, everything will be expensed by FY27 onwards, right?
Yeah. In fact, on HPCL books, the bulk of capitalization will happen this year, later on. Because remaining is on HRRL books, on the console it will be done. But after Vizag, which we expect to capitalize this year, nothing major is left. Of course, we have routine expenditures, but those
of course.
are for the course.
Okay. That will bring in additional
EBITDA also, yeah.
Okay. Understood. Thank you so much, sir. Thanks a lot.
Thank you. Our next question comes from the line of Amit Murarka from Axis Capital. Please go ahead.
Thank you. Just on the on the Rajasthan refinery, it was mentioned that 55,000 odd crores will be your share of EBITDA, which you are projecting into the 40,000 crore expectation. Just wanted to clarify, this will be an associate accounting, right? So that EBITDA would not be consolidated. Is that correct, or are you planning to consolidate the refinery in your financials?
No, it will not be consolidated. Only the profit portion will be added.
So essentially, that EBITDA will not show up in your EBITDA, right?
It would not, but typically any investors and even the bankers would like to have a full view of the same. So that is why, for good governance as well as for better transparency, we are sharing those.
So like you guys are consolidating debt, which was done earlier in this, you should consolidate EBITDA also for your numbers. Because you gave
no, we are not consolidating debt. I don't think anyone is consolidating debt here. Okay, yeah. No, that's fair. It should be like to like. That's all.
The number of 5,500 crores, not 55,000. I would love it to be 55,000, but these assets don't generate that much.
No, my bad. I meant 5,500. Also, just lastly, is there also a review of the ROE/ROC frameworks when you take up new projects, or how do you really go about evaluating projects?
We keep on doing that consistently. At all points of time, there are obviously thresholds we use, and then there are also strategic calls where you go below the threshold. But I think that's a routine management activity, and we keep on working on it at all points of time.
We have a board-approved investment philosophy, structured policy on the same. But yes, depending upon the individual project as well as the size of the project, individual calls, project-specific calls, considering the project risk, project opportunity, strategic call, and all those are factored and accordingly decided.
But if it gives you comfort, I can tell you the current management team is not dollar happy in that fashion. We are frugal. We demand a fair amount of returns, and we stress test those returns quite a few times in taking any investment decision, big or small.
Sure. No, why I ask that is because, I'm sure you're aware about it. The current petchem spreads are so bad that unlikely there will be significant ROC generation of petchem projects at current spreads. So, just in the context, I wanted to understand how you go about evaluating new projects.
So we are not right now. Right now, the petchem we have $2.4 million back. Investment decision was probably taken 5-6 years ago. What we are doing is working on improving realizations. As I said earlier, we are looking at niche products. We are doing a lot of work on R&D. So so that we can improve the realization in the current market situation which we all know about. And also any further investments are going to be very specific downstream activities which are building on what we have right now. But as of now, there is no horizon that another 30,000 crore of capex is coming up or anything of that sort.
That's all from me. Thank you and best wishes.
Thank you. The next question comes from the line of Sabri Hazarika from MK Global. Please go ahead.
Yeah, just one clarification. You mentioned that you were trying to achieve the EBITDA loss from this chlorine contamination to under 150 crores. Is that right?
No, we said there are two buckets of the loss. There was one which is already incurred in terms of the product which got contaminated, which we have to sell at a discount, which is naphtha, which roughly would be around 150 crores as and when that export parcels are done. Second, there was movement which we had and then some product loss, etc., which would be, which again numbers have to be finalized, and anyway in any routine business also there are some amount of movement losses which we have. That we are restricting, or we are trying to get it under 150. With early commissioning, we were initially anticipating 4th November as when the units come back, but early commissioning was helpful. The third open bucket is the crude, which is the part of the crude which is still sitting with us, which we are talking to others who can process it, and that could have some amount of it. Having said that, we would also be raising claims in line with the all the crude agreements, etc. we have, and in line with what we have declared to the stock market. So there will be some recovery on that. Overall, I think we are in a real, while it was a big impact in terms of contamination, something of this sort has not happened in an Indian refinery in the recent memories. But our team was very smartly able to do, and with a lot of effort. This was all happening around the Diwali time, so a lot of people spoiled their Diwali in trying to keep the effect back there. So we were able to contain it very nicely and even get the units back early. So I wish it had not happened, but as the CEO, I'm happy that the pace at which the team got it back and the amount we were able to mitigate there. So that's all I would say. We can take it in our stride. It's absorbable by us. It's not a. In fact, we have been able to limit the damages much lower than what we had anticipated when we gave the stock market guidance at the beginning of the week.
Right. And just one question to Vikas regarding this LPG market. You've given some view on crude prices, but LPG is currently, seasonally it should have gone up, but there seems to be some sort of price war or something of that sort, while in December also we are seeing prices just coming down. So what is your assessment? Is it like a temporary phenomenon, or do you see a permanent reduction in LPG prices by the likes of Aramco or even US players?
Of course, if I could predict those prices, then I wouldn't have to work 12 hours a day to earn my salary. But jokes apart, I think some of what you are seeing is the effort which has been done by the companies. I'm not going to speak much about the strategies on the call, but if you carefully see what has happened in the last 5-6 months between all the three OMCs, even what is in public domain, you can decipher one strategic factor why the cost is now lower. So we hope the Saudi CP and all remain lower. It definitely helps in the business. But there has been an effort which has been done not only by HPCL but other OMCs. All three individually and all three collectively have also done some things which have, I would say, reshaped the market a bit. I will not go into specific strategies of what we did and what was done. You guys can do your own judgment on it. But we hope it remains benign and it does not spike on the like it used to do every December.
Okay, that's great. Thank you so much, and I wish you all the best.
Thank you. Our next question comes from the line of S. Ramesh, who is an investor. Please go ahead.
Thank you very much, and congratulations on your results and your insights on the management thought process, on the historical performance and the way forward. If you can share your thoughts on the roadmap for the renewable energy subsidiary in terms of capitalization and when you will see visible cash flows, and any timeline for listing that subsidiary. And secondly, in terms of you mentioned on the digital pathways Any thoughts in terms of going in for the benefits of artificial intelligence? Since you mentioned the consumer-facing businesses and the consumer footfall you have, what is the kind of thought process on that? And if you can also link it up to your non-fuel retailing, that will be helpful. Thank you very much.
So, thanks, Ramesh. And 2-3 questions you had asked. On the first question on green, while we have declared a ambitious plan earlier, we haven't actually deployed much capital on it, partly given the earlier part of the call we were discussing about capital and deleverage and all those things. And secondly, as a management team, we believe that plain vanilla solar and wind is not likely to give companies like us the best returns. We are not best placed for those bulk utility projects. Hence, we have been very selective in what we are doing. So currently what we are doing, there are 2 planks we are working on in the CBG business as of now. One is a lot of greening in and around HPCL, which itself will take it to potentially about 1.8 gigawatt of portfolio in the next, say, 12, 24, in that month. In a couple of years, it will take it to that portfolio. We are also looking at augmenting green, which is going to go additional activities like as we do hydrogen, can we bundle some of our green in? So some of the factors which are around our business rather than doing a plain vanilla solar park somewhere just for sake of getting renewable numbers. The second plank we are working on is on the CBG business, which we believe is a very nascent business, still not giving returns, but an important one from the long term, even the net zero commitments of refiners. We already have a couple of plants, especially our main plant in Badau, which is yet not generating a lot of positive cash flow, but our teams are really working into deeper onto understanding how that business can be made profitable. If we can get the unit economics right, we have a plan to scale up that CBG. We have line of sight or a roadmap for another 20-25 plants. But we will do the massive scale up only after we get the unit economics right, not before that. I don't want to have 10 plants which I want to improve the economics. I would improve the economics on one plant and then ramp it up. So that's the current roadmap on green. It's an evolving one. We will add more, and as we get free, as we get more debt leverage reduces, and we get more cash coming out of the business, that's the time we can add more on it. We have refrained from going after big capex there. IPO, we have not yet firmed up when we would want to do IPO on that one, very honestly. I think that's one. On the digital side, I think those are exactly the things we are trying to do and see how we can get more digital tools into our system to get what one of the earlier colleagues was saying on making more of us as more of a consumer-facing businesses. And then obviously everybody is using AI. The only caution I would say on AI is I read an article yesterday which says 85% of or 85 or 90% of AI projects have actually failed across the world. So we are careful on what we want to add. It's a mixture of AI, mix of other digital tools, mix of increasing things like consumer, our CRM databases, etc. But we are working on a complete digital roadmap on this. So I hope I've answered your question, Ramesh.
Yeah, just a follow-up on the non-fuel retailing. Any numbers you can share in terms of how it may add to your overall volumes? It's
too early for the numbers right now because we are in the because it's too small in context of our retail right now. But we are working on some very interesting strategies, which if it unfolds over the next 6 months, you might see some more visibility around our non-fuel retail business. Right now the numbers are insignificant. I would even call as an investor, you shouldn't worry about my non-fuel retail business. It's just that if the intent goes right, then it adds to what I think Sumit was saying that earlier on consumer. We get closer to the consumer and we also start generating more business. It adds to my bottom line. Maybe in 6 months from now, we'll be able to give a guidance on what quantum does it have.
Thank you very much and wish you all the best and the best of success. Thank you.
Thank you.
Ladies and gentlemen, we will take that as our last question for the day. I now hand the conference over to Varatharajan sir.
People in the queue, I would request them to take up the questions with us or directly with the investor relation team of HPCL. The floor is open for the closing remarks, sir.
Okay, sorry. I thought you were waiting for a question. Anybody who's left with questions, I think the time's over for all of us to be there, but we'll be more than happy to take the questions. I would only reiterate what I said in the beginning of it. The business you are following or business you are investing in is an absolutely solid business on a growth trajectory, on an increased profitability trajectory. We have performed well. We are hopeful and confident that we will continue to perform well and generate both growth opportunities for the organization and our people, and also wealth creating opportunities for anybody who chooses to invest in HPCL. I'll close by thanking you all for a very active participation, the questions you all had, and should there be any residual questions, shoot it to us. If you do want to have follow-on discussions, we are more than happy, depending on schedule. Director of Finance and me, and easily meet Vinod and others in our team are always available for interacting with the analysts. And till then, till we meet next time at the end of next quarter, thank you all for your interest and appreciate you joining the call. Wishing you all the best in the times ahead. And if we don't speak before the year end, wishing you all a very happy new year. Thank you.
On behalf of Antique Stock Broking Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.